Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame expanding diagonal scenario, which is a bullish scenario where we're looking for a 5-wave structure to the upside for eventually a wave 2 in green and then continuation in the bigger wave 3. In this particular scenario, the most common target area for wave 5 and therefore then the end of green wave 1 is between the 1 and the 1.618, which was between 29.1k and 30.7k, which could be finished over here, or we're in a wave 4 and then eventually looking for a wave 5, as I will explain on the lower time frames in a second. In this particular scenario, wave 2 retraced to the 0.5, less common for an expanding diagonal. Wave 4 retraced to the 786, which is common for an expanding diagonal wave 4. Wave 3 is longer than wave 1, that is what you like to see, even though this wave 3 is quite short for an expanding diagonal, as usually you will at least hit the 1.272, the 1.38 or the 1.618 over here for wave 3. But at least longer than the 1-to-1 is a requirement, and the same with wave 5. This over here is your most common target area, which has been hit very nicely indeed. If we then look for a wave 2 to the downside, then the most common target for a wave 2 is between the 0.5 and the 0.786, which is between 27.4k and 26k. And if I then open my target boxes over here, and you can see that at the 0.5 we have a wide target box we pumped through, so we might also always retest this area before continuation between 27.4 and 27.6. On top of the 618, another one, 26.8 to 26.9. Then down there, 26.2 to 26.3. And just below the 786, 25.7 to 25.9k. The invalidation is if price would move to the downside and take this low over here. If we then zoom in to this structure over here and we look at the more local bullish scenario, then over here we either have of course a structure that is finished now, or you're going to be looking for a wave 4 and then a 1, 2, 3, 4 and eventually a wave 5 to the upside. And I have something important to say about this, because this wave 4 over here retraced to the golden pocket, the gray line that you see on the chart, which is the 618. Taken from the low of 2 to the high over here. Now for a wave 4, it is incredibly rare to retrace to a golden pocket and still be a wave 4. Incredibly rare. Usually the 0.5 is the maximum target for a wave 4 and you do not hit the golden pocket. However, the safe and potentially grace for this wave 4 is that higher degree wave 4s tend to retrace to lower degree wave 4s. So if this is then a wave 5 to the upside in a lower degree like 1, 2, 3, 4, 5, this little range is a lower degree wave 4, which means the higher degree wave 4 usually retraces to the lower degree wave 4, but it hit the golden pocket, which really lowers the probabilities that we're still in some sort of a wave 4, and then expect another wave 5 to the upside, which increases the probabilities that a move over here is finished and that we have something like this, so that the wave 5, the final wave, was the wave on the highest volume towards the upside over here. And that is also less common, that wave 5 has the highest amount of volume towards the upside, as usually that is a wave 3, but of course this was quite a unique scenario yesterday as well, so we can at least take it with a grain of salt and also accept this particular scenario. It's just to explain that for a wave 4, price retrace very deep, which lowers the probability we're still in a 4 and might give a better idea that we ended a wave 5, but in general we are now ranging. That's what we like to see, and the range will give us much more information about what is yet to come. If we zoom out to the 12-hour, then over here we have the bearish scenario. So in this particular scenario, we then have a WXY, flattened W, X, zigzag in wave Y. Common target area for wave Y has been hit, as you can see. Very nice indeed. Now in this particular scenario, preferably this is your high, because this wick is already above the 1.236, and also if I take a trend-based fib from the low to the high of W to the low of X, toggle on the wave Y target area, then the 1.618, as you can see, has also been tagged. So preferably you won't see price going above this high. We're going to be looking for a move to the downside, where if that is the case, we're going to be looking for an impulsive structure and then a 5-3-5 continuation to the downside, meaning you would like to see 5-wave structures on the very low time frame here. If you go to the 1 minute, it's a bit difficult to tell But there is the opportunity where from the high you have a 1, 2, 3, 4, 5 wave structure. But that is, again, we are ranging. We have to simply be patient, wait for the range to give us much more information, and then take it from there. If you look at the confluence in this area, then what I think is quite interesting are these two support resistance areas. So over here, we found resistance twice. It's now acting as support. And this lower target box is between 27.9 and 28.2K. At the highs over here, price wicked exactly into this support resistance areas, which is over here resistance, bit of a range, but then of this range is the support area, and it's the order block here as well. So it's a perfect support resistance flip for, in this case, resistance, immediate move to the downside, back to support. This is quite important support as well, of course. As you can see, it kind of like divides this whole range into a upper section and also a lower section. So this is quite an interesting support resistance area to keep your eye on. Now, more locally in then the bearish scenario over here, we could be looking then for a wave 1 to the downside, and then you want to see a wave 2 and eventually fall down in a bigger wave 3 impulse. So in this scenario, we then label this wave 1. And if we're looking for a wave 2, again, most commonly 05 to the 786, which in this case is between 28.9K and 29.5K. So preferably price will still find some more upside locally over here, where the 382 is a less common target and the 05 has not yet been hit. And something I think is interesting is at least for price to move to this target box over here. Of course, we already tested the target box, but it was so volatile that I think it will be interesting to move back up here again. And we have this in confluence with the golden pocket as well, which is a very common target for a wave 2. So locally, it makes sense in both the bearish and the bullish scenario, because in the bullish scenario, you eventually look for price to continue and take this high. But in the bearish scenario, potential wave 1 and 2, you also would like to see price move to the upside still a little bit, for then eventually potential continuation to the downside. Now, if we look at the bullish CVD divergences and we zoom out this time, then the bullish CVD divergences have played out. So we had bullish CVD between this low and the higher low. This one was the first one that appeared on the chart. Only after price then moved up, we started to see the bearish CVD. And as always explained, that means that the bearish CVDs here have lower probability of playing out, because the bullish CVD was first, gets priority, has played out now. So the bearish CVD is invalidated and the bullish CVD has played out very nicely indeed. If we then look at the probabilities, then currently the probabilities on the medium time frame, which is even higher actually, I didn't go over it, is still bearish as long as this over here, the high at least, is not taken, because there's also the potential WXY scenario on the low time frame, which is this scenario, WXY. A WXY against an expanding structure will always have higher probabilities from an Elliott Wave point of view, because an expanding structure is in general very, very rare in Elliott Waves, and therefore it's never preferred and always has lower probabilities than any other scenario. So it will be interesting. More locally, we expect a bit more upside, but also the range that we're going to be in right now, that is going to decide if we get continuation or if we get a move towards the downside based on the structures that are forming locally. Because zooming out, well, on the low time frame, an expanding structure and an expanding diagonal against a WXY, the WXY will always win. So yeah, the probabilities are not on the side for the bulls, but in that scenario are on the side for this to be a high and a move down. But I prefer to just be very, very patient, wait for a range to form, get the information over here, as we still expect a bit of a move to the upside, also in the bearish scenario in a 1-2 continuation. Wait for the information that we get over here and then take it from there. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.